Hello and welcome to another update video about Natgas. So it's time for an update. The forecast here, we want to take a look today only at the futures chart. Yeah, the last update we also took a look at the spot chart, which is, to be honest, quite different from the futures chart. Yeah, it is quite different. So what we want to do, however, is to understand here the structure on the futures chart. The futures chart, in my opinion, more than the spot chart, would suggest still further rising prices here in this ongoing C wave, which is an ending diagonal in a wave 4 correction. You can count this also in different ways, right? This is a very, very messy structure, this diagonal, but we've got a wave 1, we've got a wave 2, we've got a wave 3 in the making, in which we have an ABC structure because we're dealing with a diagonal. So this can be an A wave, this can be the B wave, and then the C wave might happen next, and then we get a 4-5. And then finally, this correction could be over. We're still watching primarily at the moment for another low. Still primarily watching for another low. I would have to change my view above $4.52. It would then just go too high. It would just move too high. Also, if there is a clear 5-wave structure to the upside and a 3-wave pullback that I can recognize, might also change my perspective. Okay, so we always need to listen to the market. But so far, broadly speaking here, this structure, even though it's completely messy, has done what we wanted it to do throughout this year. We wanted it to go higher after this move down and this low that was made in April into the yellow box, which it has done. It's just extremely boring. It's an extremely boring market. Slow motion. I mean, huge respect who's been following these videos throughout this year, because it's been a pain making them, because we haven't got a trending market at the moment. Yeah, I mean, it's a weak uptrend, yes, but it's not impulsive in any way. Also here, the latest move down is just extremely messy. But anyway, we've been focusing on higher here. We had some nice entries. Yes, some broke, which is not the problem, or some support levels broke, which is, well, not a problem. It's not a surprise in a diagonal structure, because we're not in an impulse. Okay, this is just yeah, messy, and it takes ages to work through this correction. But anyway, what we've got is an A wave, a B wave, and we're likely in this C wave to the upside. This assumption is valid as long as we're holding $2.65 below $2.65, which is the 78.6 retrace, and also it would imply a break below the lower boundary line of the trend channel. Below that level, I would have to look for something more bearish more directly. We might then head down into the, let's say 150 to 170 region directly for another low before, however, a larger recovery can unfold. At the moment, we were watching in the last video here for, so obviously we said A wave, B wave down and the C wave up. We were watching for this C wave within the B wave to finish. And I explained in the last video, ideally, we're going to get another low here in wave 5 of C of B, because we only had 3 waves down. It's good to see that we now have 5 waves down. Yes, it might get another squiggle here to the downside, but overall we have reached the support area, which could trigger a trend reversal. Valid as long as we're holding 265. And let's see if we react to it next week. If we start to move up, then a first indication that a low has been established in this wave C. A first indication would be a break above the $3.28 level, this swing high, followed then, and that would be confirmation obviously, by a break above $3.64. By that time, we would have moved quite significantly. But we've got 5 waves down, yeah, so it's an A, B, C structure. Bit of a strange move. But it looks a bit like a running flat. It has to be a running flat. If the C wave ends above A, then it's technically a running flat, which is a rare pattern. So I would not rule out another micro low. Maybe hitting the trend line here might be a reasonable assumption. Anyway, all we've seen so far is just a tiny reaction to support here, but it's a bullish engulfing candle on the 4-hour chart. So we'll have to see how Monday starts. If we push higher, break above micro resistance at $3.11, that would be really the earliest indication that things might be shifting. Then it takes a break, however, above $3.26, $3.27 to confirm it further. And if this indeed is circle wave C of 3 that is unfolding to the upside, then we can look at a potential target. We can calculate that. But again, it's not very reliable because we might not have the low in place yet. But overall, it might move to $3.93. We'll see if it gets there. We haven't got the confirmed low in place. So this is only based on the current low, and that measurement has to be taken again if we make another low. But that would also be in line with the larger 38.2 Fib level. Either way, at the moment, I haven't got sufficient confirmation that we're already coming down. So it can still push higher from here. That would be in line with the wave count. I would follow that at the moment. On the other hand, you need to see that even here on the futures chart, we have now 5 waves down. So if instead of a 5-wave move to the upside, which would be the C wave, we see a corrective rally, then this would be a potential crash alert, because it could indicate that we already have started this move down. Then we would see 5 waves down next, 3 waves up again, and then it would follow or lead us into this $1.50, $1.70 region. I can also give you a resistance area, in case we get that corrective rally. We might be able to pick that up next week, depends on how the structure looks like. But if it's clearly corrective, like a 3-wave structure, and it rallies into resistance and reacts, then this would be a warning for the, basically for the bulls, a warning that the bears are taking over. And the resistance area, standard resistance, is here between $3.27. That's the 50% retracement level, and the 78.6 retracement at $3.48. That is only standard resistance, but a wave 2 should really not exceed or go beyond the 78.6 retracement level at $3.48. In between, we also have the 61.8 Fib level at $3.35. Might be worth watching that one as well. Yeah, that's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our stocks and S&P 500 service. You can find the link in the description. There are daily video updates. In addition to that, we cover the Nasdaq from time to time and some other stocks as well, depending on the tier that you select. You can find the link in the description. Thanks a lot. Enjoy your Sunday. Bye-bye.